Hi everyone, welcome to the Startup Operator Podcast. I'm Roshan and today I'll be speaking to Aviral Bhatnagar, who is a senior associate at Guild Capital, a venture fund that invests in early stage startups. He's also among the most lucid writers on startups and investing. He's extremely popular on social media. His posts on LinkedIn routinely get tens of thousands of likes, and we'll talk to him about some of those things on this podcast. So without further ado, welcome Aviral to the Startup Operator Podcast.
Thanks for the invite, and thank you for the kind introduction. Means a lot.
Yeah, thank you so much for your time. I know we're doing this the second time because of bandwidth issues, so I really appreciate your patience.
No worries.
So, all right, let's set some context. It'll be useful to understand how you got started in the world of venture capital. Can you help us understand that?
Yeah, so I think the inspiration for me started when I was in the second year of college. I ended up working on a startup which was pre-internet. So it was an educational magazine for students in good cities which were not metros, and they didn't really have access to career opportunities like people in Bombay, Delhi, or Bangalore would have because of their location. And that really got me thinking. It really helped me understand that, we can do something like this in life, like building a company and starting something like that, right? So that was my first brush with a startup. Although I didn't know what I was doing, I was just doing something I enjoyed. I like to write, and that really was the reason why I started. But then my role as an editor, it evolved into more like a business person, where I was actually going and selling magazines to schools. In my fourth year, I worked with this startup called Function Space, which was funded. I think that raised 500K or something, which was again an educational startup. The goal was to have a community where you could solve problems related to science, right? Like deep calculus problems or physics problems, things like that. Now, one of the co-founders actually runs this company called Rafik now, and I am in touch with him today. He's built a fabulous and very big business, and that really got my interest in on the startup side of things. In my second year during B school, actually during my summer internship, I did a buy side internship, and I was like, hey, I like buy side a lot, and I like startups a lot. Buy side plus startups equals VC. So that was very simple and naive way of coming up with how I wanted to do venture. But I was really lucky to get an opportunity straight out of B school to join a venture fund, because I had no experience prior to that. I was straight through college into B school without any experience, and my fund took a bet on me. I think that was pretty good.
Awesome. Yeah, so you've relentlessly pursued different endeavors all through college itself. Was that like a conscious thing, or I mean, you just thought it's a cool thing to do?
Yeah, I think it was the latter. It was not conscious. It was
Yeah.
more like cool thing to do. I'm a very curious person. I like to read and experience new things, learn new things. So that really was the origin of all this. It wasn't like I decided, hey, I want to do this, and then I will do this. It was not some set plan or set path. In fact, I joke with a lot of people that before joining college, I wanted to do physics. During college, I wanted to do consulting. In B school, I ended up doing a banking and private equity internship, and I finally ended up as a VC. In the span of like 4 years, I wanted to do four different things, right? So there was no conscious decision as such. I just ended up here, doing what I like to do in that moment.
Right. So one thing led to another, basically. No,
Correct.
no grand plan as such.
That's right.
Quite unlike B school people, actually.
No, yeah, absolutely.
So,
No grand plan.
so going into VC, right? Help us understand that path. Like, I mean, so you join as an associate. What are you expected to do, and then what do you graduate to doing?
Yeah, so you actually join as an analyst. That's really the entry level position at most firms. Um, I would say that there are three work streams that are there in a venture fund. You have sourcing, diligence, and portfolio management, right? So the weightage of each of these varies as you become more senior. right? And the value of your decision making becomes more and more important. Although I think that at every level in a VC firm, you are going to be doing all three of these at some point, right? It's just the weightages that change. So when you're junior, you tend to focus more on uh, getting companies through the door and maybe developing a little more of the market understanding. When you're like in the middle, you will focus more on diligence and get some exposure on portfolio management and on boards. And finally, when you become really senior, your network has become very big and very useful, and you tend to spend most amount of your time on boards and actually helping companies exit and then making decisions. So your decision making quality improves, and the importance of your decision making also improves. The more junior you are, the less the focus is on decision making, and the more is on your ability to build a network.
Hmm.
That's how I see it.
So now it kind of makes sense, the whole junior VC sort of a thing. I mean, and
Correct.
you're being active on social media. So
Correct.
we'll talk about that in further detail as we go along.
Hmm.
But I wanted to understand your thoughts on early stage investing as such, right? So I kind of like to think of this. There's a guy called Startup L Jackson on Twitter, very
Okay.
famous app, who said something like, every investor who comes in after me is a spreadsheet jockey, and
Okay.
every investor who comes in before me is a dart throwing monkey, right? So,
Okay. I don't know who this guy is, but okay. Cool.
yeah,
Cool.
so that's
Interesting.
a pretty cool line about startup investing, right? So the essence is, some people think it's an art, some people think it's a science,
Right.
and it's somewhere in between, I suppose, right? So how do you look at early stage investing? If you can help us understand the mechanics, basically.
Yeah, I think it is more art than science, and it is more art than science for um, up to like a series B or series C. Then it starts becoming more scientific, right? In the early stages, you have all kinds of risk, right? So I would define it as market risk, team risk, and product risk, right? These are the three kind of risks that you have when you're doing a seed bet or a like early bet. All risks are there on the table, right? Market is not validated, team is not validated, product is not validated, right? A lot of people take bigger check bets on established founders because the team risk is kind of managed,
Edged.
but usually the team risk is there, right? The very few founders who you can actually bet on and say, hey, I can write a 20 million check for this person. And as you start progressing with stage financing basically allows you to mitigate certain risks as you uh, start seeing the company grow and things like that, right? So I think the first thing that um, really gets validated or removed is, does this product work? Right. So I would say the first thing is a product risk. When you start seeing buyers or you start seeing users, that starts getting validated. So by the time seed round is done and you've done some time after that, the product risk kind of is like reduced.
Mm.
The next that comes is team risk. So there is a product that works, but do you know if this team can scale? Right. So they are able to do like up to 1 million of revenue, but can they do 10? Right. That's team risk. Number two. Once that is established, I think that gets them to a series A or series B, and it's kind of established that hey, this team can execute, they're able to scale. Now the final question is the market big enough, right? So that's the final one, and that's when spreadsheet jockeys come in, because they understand that hey, the market is big, there is some math that can be done to make this work, um, and the market risk is the one that they end up taking. So in the earlier you are, the more risks you're taking, obviously. And by I think a series B or series C, the market risk kind of is the only one that's remaining.
Right. So I think, but I mean, if you look at early stage startups, even going into accelerators and so on, right? I mean, they're usually expected to have, if not paying customers, at least a few users and so on, right? So that's sort of getting, I don't know. I mean, is it a sign of the maturing startup ecosystem, or is it like, investors having higher standards and seeking more validation?
Not
Mix
really.
of
I
both.
think it's very case to case basis. I actually have seen pre-product teams that are able to raise just on the basis of the background. right? And they're not even like second time entrepreneurs. They're just like good colleges or have worked at good companies. That's it, right? So you don't need to, uh, the thing that really happens is that investors have these three risks. They're like, hey, I'm not so convinced about this team. Let me see some product. While when they're convinced about the team, they're like, oh, the team is awesome. It's amazing. I don't need to see any product traction. So I think it's a mix, and you're really trying to just manage all these three risks when you're in.
Yeah, and I think that's often something that people don't get because they think it's, for example, unfair that someone like uh,
Purefit. Okay,
Purefit,
sir.
right? So I mean, people don't get that. Okay, that he raised like a 30 million seed fund, right? I mean, so how does that happen and stuff like that? But from an investor perspective, I mean, they're just trying to hedge risks, right? And as you mentioned, like a team risk and whatever other. So why would you not put money in this guy's seed fund, for
Correct.
example, right?
Correct.
The guy has built
Yeah,
a unicorn before. So
exactly.
yeah,
So I was like saying Series A, Series B.
right,
Mukesh Bansal basically was already at a Series B when he started because he's validated product and team
exactly.
before, right?
Yeah,
So you're just solving market risk then.
yeah, yeah. Yeah. And how much of this is, again, I mean, sort of a bad word, but how much of this is groupthink?
Um, hmm. Yeah, so I think that the funny thing is where if you look at life with a 2 by 2 matrix, you are right or wrong, and you're with the group or without the group, right? And you can make choices. When you're wrong and with the group, everybody loses. When you're right and with the group, everybody wins. Actually, nobody wins, right? Because everybody winning means nobody winning. But the way you
Rather, I
actually,
mean, the stakes are quite low,
yeah,
basically.
stakes are quite low. But the way you actually make money is when everybody is thinking something else and you're right?
Mm.
That's what they call contrarian thinking. Venture returns happen in contrarian thinking. If there is a group going together, um, and everybody believes in it, the returns will get depressed,
Mm.
right? The biggest successes are usually one fund invested very early, and then the company just like scaled, like WhatsApp, for example. Just one investor, 2 rounds, got sold to Facebook. That's it, right? So I think that the way to, there is a lot of groupthink, and that's why co-investments and stuff happen. But the ones that are actually successful is when the investor who invested first made a very individual, firm level, unique decision, which others didn't believe in, right? And that could be because of their network, that could be because of their understanding of the market, decision making, things like that. But the ones that get in earlier and the ones that get in like kind of solo, they're
Mm.
the ones that make the most money generally.
Right, right. And, from a startup perspective or from a founder perspective, right? It's important for them to understand, there are investable businesses and there are businesses that are not investable, right? Or rather,
Correct,
lifestyle businesses and so on.
correct.
You want to draw out those distinctions. I mean, so as an investor, as an early stage investor, when you're looking at a business beyond an idea itself, what should the business have from a numbers perspective or from a financial perspective?
Right. I mean, there is no straight answer, honestly. It's very unique, case to case basis, market to market basis, company to company basis, right? But I can give you a high level of what really is important. There are four things broadly, and every investor will look at these four, call them different things, and label them their way. But the four things are: you need to have a market, you need to have a model that scales, you need to have some traction, and you need to have a good team, right, that can execute. So these four boxes need to be checked. Is there a big enough problem that they're solving, which means is there a market? Does the model scale, which means that um, does it need too much money to become big, or can it do it in a capital efficient manner? And if it needs capital, like let's say $1 billion, will it end up winning a multi-billion-dollar market, right? Let's say Swiggy or Zomato, why they're able to raise so much money, or why Flipkart raise so much money, because the expectation is that they are playing in like 50 billion, $100 billion markets, right? So is the model scalable? Is there traction, which means product market fit, and can the team execute, right? Will they be able to navigate the market as well as challenges as well as scaling the team, right? So these are the four things. There are no numbers as such that I can point to, right? For example, if you're in a direct to consumer business or brand, X amount of revenue is important. If you're in a very early deep tech business, maybe no revenue is required. You just need to have R&D. So there's a spectrum. I would say that the more mature the market is, which means that the easier it is to start a business, the higher the revenue expectation is.
Hmm.
Right? I think that's the way I would look at it, at least from a traction standpoint.
But let's say, I mean, so I seek an investment of $1 million from you, right? Or whatever check size you write. How is it that, just take us through the process of your making money on that?
Right. So I think I'll just take a generic rather
Yeah.
than specifically how we do it, but it's true for most funds, right? So let's say you want to raise $1 million. The first thing we will do at least is understand the team, understand the market, and understand the value proposition, right? What is the problem they're solving? What is the size of the market? Who is the team that's executing? These are the first three things that we will really deep dive into. And when you're looking at the market, you will assess how big it is. When you're looking at the model, you will see, hey, they can scale with this amount of capital. They need to do these things. This model looks like it can scale, which means either the lifetime value of customers is really high, or the CAC is really manageable. The LTV to CAC makes sense. LTV to CAC is a very good way of looking at any business, SaaS, consumer, because it just tells you how much value you can get from a customer and what is the acquisition cost
But
that you have.
at the early stages, don't you think that like LTV CAC numbers are not truly reflective? Because
Absolutely not. They're not. They're not. So, I mean, I'm just saying in a consumer business,
Hmm.
you could get these numbers. In a software business, also you can, but in some businesses, you can't. So, you'll have to identify another metric, right?
Hmm.
You have to get either LTV or CAC or proxies of the same. So, proxies would be engagement, right? How much are people using this product, which means that they will pay for it and they will stick to it in the future potentially. How much are you having to acquire customers? For that, I mean, you will always have to compute. LTV might be difficult, but CAC definitely. I mean, you are spending some money or time, things
Yeah.
like that, right? So that's a good question. And then you look at the team. Can they execute what they're saying they can? Right? We are backing this team to be able to execute, to be able to scale, to be able to build a big business, right? Can they do it? So you will evaluate these three things and see if that makes sense. Another thing that investors look at is a hurdle rate. So generally, a lot of startups tend to not succeed or survive, and the most is like 1x or zero, right? Either you just put X and you get back X after some time, or you put in X and you get nothing because the company
Hmm.
dies, right? So you will try to see if you can get a 10x return on the business, right? On the investment. So let's say you're investing 1 million for 10%. That's a 10 million valuation post money. Can you get to 100 million valuation in this category? Is the question. What do you need to do that, and what does the team need to build to achieve that? So we'll ask that question then, and then see if that it's realistic. So if you're building $100 million business, what are generally the revenue multiples or the EBITDA multiples? Can they get to that? Is it realistic in a 4 or 5 year time horizon, or will it take like 20 years? Or can they get even earlier? And this looks like a great bet. So things like that are questions we ask and we try to assess. And then once we get to the answer, we make a decision whether we want to invest or not. But you need to check a lot of boxes. And investors actually do very few investments per person. So the bigger funds have bigger teams. So that on average, an investor who could be a partner, vice president, or something like that, does 1 or 2 or 3 at max investments a year. because you're looking at long-term careers, 5 to 10 year careers. So you're doing 15 to 30 investments over a 10-year horizon, which is quite a bit.
Right. Right. So let's say a deal comes in, or rather, you introduce a deal to the partners or whatever. What is the process it goes through until, from when it is sourced to actually when, an investment happens or it's dropped?
Right. So, I mean, I directly pitch to partners, but some funds you could be more junior or you could be more senior, depending. But if you're once it gets to the partner, we can talk about that, because the steps it takes before that could depend on how junior you are in the firm, right? So the number of folks you need to,
Yeah.
get buy-in. But once it goes to the partners, you have an investment committee that makes a decision. Usually it's on a weekly basis. You evaluate one or two companies and so on. And the decision is like, hey, it makes sense for the partners to meet with the founders. So once the partners meet with the founders, they take a call that, hey, this is interesting, let's go ahead with it. So then you start deep diving into the company. You get more specifics into details of customers, their numbers, if that makes sense, talking to teams, doing customer calls, references, things like that, to understand the business in greater detail. And this exercise could take anywhere between 2 to 3 weeks to a month. And then you make a decision, hey, yes or no, do we want to submit a term sheet or not? So once you submit a term sheet, then you actually have like financial and legal due diligence, which could take 45 to 60 days. And then the investment is made. So I would say from the time you are introducing a company to a partner, it probably, in a good case, could take um, 2 to 3 months before the money hits the bank.
Right. Right.
Okay, really sorry for the interruption. I'm just going to take a minute to talk about something amazing. Clogo helps your remote teams be more productive by helping them close decisions more faster. I've worked remotely for the last 4 months, and it's just a lot of going back and forth on Slack, on email, on Zoom, etc., but never really getting to a point of execution, right? Well, Clogo makes things a lot more simpler. You can have communication contextually around decisions that you want to make. All you have to do is open a thread on Slack like this and continue to talk about what you want to do. With a set agenda, it could be your product roadmap, it could be a marketing campaign, it could be a support ticket, etc. And once you're done, it all syncs with your Slack, and you have all of these decisions accessible when you need it, where you need it, right? Guys, I've tried this out and it makes you super productive. If you're even remotely interested, I suggest you go to clergo.com, that's CLERGO.com, and check it out for yourself. Cheers.
So bootstrapping is often, glorified, right? I mean, you have examples of people who've sort of made it on their own without any investments as such. What is your opinion on bootstrapping as such? I mean, can everyone build like a Zoho? Or should they? I mean, or should they?
I actually don't think bootstrapping is as glorified as it should be, right? So I think raising money sometimes can be an easier route. It is definitely the faster route, right? You cannot grow as fast as you can without money than you can grow with money. Like, simple rule, capital makes you grow faster. But it's a choice that the founder has to make, that, hey, am I okay? Zoho took 20 years to get where it is. Probably, Freshworks will take 10, because I don't know. I mean, I'm just giving an example, but a capital infused business versus a bootstrap business, they will take different times, right? So the question you really ask is, do I want to grow really fast? And if I don't want to grow very fast, is that choice going to mean that I will die, right? So sometimes there are certain businesses that cannot survive growing slowly by being bootstrapped, right? And these usually tend to be categories that tend to have a lot of network effects. For example, food delivery businesses or ride-hailing businesses, where supply and demand reinforces each other, and then the bigger players start aggregating and becoming bigger, right? So where bigness means you win,
Yeah.
then you cannot decide to remain small, right? But in most categories, being small and growing at your own pace is possible, right? And I think that that is a decision that the founder has to make, right? That, hey, I want to grow profitably, I want to grow slowly, and I don't think I will die if I grow slowly. If that is true, then bootstrapping is a fantastic way of building businesses. And if you look at most businesses in India, actually, they're all bootstrapped. Like 99% of businesses in India are not funded,
Yeah.
right? They're like your kirana stores and your family businesses. There's so much wealth that has been created
Yeah.
in this $2.5 trillion economy, which are not businesses that have been funded by anybody, right?
Right.
So I think bootstrapping is very uncool and it's not glorified. I
Mhm.
think that it is a way to build efficient businesses and scalable businesses, but sometimes, you need venture investors to give you advice, to help you grow faster, or to help you grow in the right way. And capital is not the only thing that they bring to the table.
Yeah, it's hugely dependent on the founder's aspirations himself or herself, I would say, right?
Yeah, yeah,
You are the sort of person who wants to grow 15, 20, 30% every year and are content with that. I mean, why not? So,
yeah.
depends on that. So you write about a ton of businesses, right? So you write about Byju's, you write about Zomato, etc., etc. What are some of your favorite sectors? I can guess EdTech would be one of them, right?
Yes.
Do you want to talk about some opportunities in EdTech at this point of time?
Yeah, so I'm interested in any category that has businesses that could become future game changers, right? So I don't try to restrict myself to any particular sector. There was one time when I was deep diving into crypto and blockchain, and I understood that category in great detail. I'm still quite pretty excited by it, but it doesn't have a killer use case yet, right? They say the killer app. Every category tends to have a killer app over which either you can build or it itself becomes very big, right? So I like all sectors and categories. I think I've been very bullish about SaaS and software. I think that India has great infrastructure and an ability to build these kind of businesses. I would see the outsourcing wave of the 90s as like the precursor. I would say SaaS 1.0 was offshoring, SaaS 2.0 was kind of product plus service businesses, which was Zoho and Freshworks over the last from 2000 onwards till 2015. I think we've entered like a third wave where marketing led product driven businesses where Indian engineering talent can sell to the world. That really is the one I'm most bullish about right now. I think there are a lot of compelling businesses that can be built. They're exactly the kind of businesses where you can bootstrap and also where very little capital can make you a very big company, right? You don't need like tons of capital to become big. So I think that's one category I'm most bullish about. The second is edtech, of course, but I think that there
Actually,
is
let's talk about SaaS a little bit, right?
sure,
I mean, I think I've said this before as well. I think if you divide the startup, what do you say, journey, India startup ecosystem journey for into three halves. One, you had the dot-com era guys like the Naukri and Sulekha, whoever, and then you had the consumer internet wave, and I think we're in the SaaS wave right now. And something that I'm particularly excited about is the economics of it works out so beautifully, right, with SaaS.
right,
Uh,
right,
the cost at which you can build versus what you can sell at, and the fact that you can sell to the world essentially, right? So do you see that we will get out of like sort of an arbitrage sort of a business where, let's say, Freshworks is a cheaper Salesforce or Freshdesk is a cheaper Zendesk sort of a thing, to actually building unique use cases and those sort of businesses?
right. No, I think so. There are a few things there. Cost arbitrage is not a bad business, right? I know it has less aspirational connotations, but in general, what really happens is that when technologies become commodities, winning in them becomes cost arbitrage,
Yeah.
right? That is why China became the largest economy in the world, right? Because they were just playing cost arbitrage. Now, if you can play on cost arbitrage and become as big as the US or even bigger, it's awesome. I mean, I don't see any issue, right? So most markets, they tend to follow the trajectory where they're like really unique in the beginning and then they become commodities, right? And when they become commodities, including in software, right? CRMs probably are more commodity than they were 10 years ago. Cost becomes important, right? Where you're like, hey, everyone has the same features. Which one should I go for? The cheapest one, right? Which means the market is kind of like hit that inflection point where it's maturing. So I don't see that as a bad thing. I think the question that you're asking is, are innovative software companies coming out of India, right? I think that, if you look at Postman, for example,
Yeah.
they're like that beacon that I say that very innovative model, very different in its way of operations, and a truly gold standard world class business that is coming out of India, right? You can look at Groova and Icertis as well. I would say to a large extent, they too are very different from what is already there in the market. And it's not a cost play, it's a product play, right?
Yeah.
So there are examples, and they are coming in bigger force right now. And I think it will keep happening, as we get better trained software engineers. I think one really big concerning factor for Asians and Indians has been the ability to sell globally, right? Market and have a global viewpoint, which I think Western countries, especially American companies, are very good at. They're able to tell stories really well,
Right.
which I think Indian entrepreneurs and founders are getting much better at. But that used to hamstrung very good products because the sales or marketing strategies were super domestic and not global in nature. So I think that's changing as well.
Yeah. Yeah. And just by pure osmosis, I think we'll learn how to market like the Americans.
Correct. That's right.
Because if you look at a typical SaaS company route at this point of time at Series C or D, I mean, you hire a American CMO and he takes you to the promised land, basically, right?
Right. Correct.
So let's talk about EdTech then. We're doing fantastically well. We have the likes of Byju's, Vedantu, Unacademy, and so on.
Hmm.
What are some of the businesses you're excited about in this space?
Yeah, so I mean, there are many exciting businesses. I'll not deep dive into which companies I'm specifically excited about. I'll probably mention them as I talk about the category. But I think it is um, our stress on English and our stress on technology, um, and even like medicine to some extent, will put us in very good books for selling globally, right? I think EdTech is that one category where Indians can really teach the world, because contrary to what a lot of the big CEOs say that India's workforce is unskilled and all that, I find that a lot of crap. I think that there are a lot of very skilled engineers and they are much better skilled than a lot of other countries, right? So with the access of the internet, you have the ability to get really talented people to teach, and not only to India, but also anywhere in the world, right? They can teach people in the US, they can teach people in Europe. In fact, I think coding, for example, is a great use case where very talented Indian engineers can become teachers for global markets, right? And this talent pool, which could become teachers or also engineers, combined with a country where domestic consumption of education is so high, you have a very unique kind of proposition where you can build a product, test it in India, because the market is so deep and it is actually pretty big for the you know level of our per capita incomes. If you look at the percentage spent on education, it's insane. Like
Yeah.
if the US was spending that much, it would be a 10 times bigger education market, right? So I think that Indian education will provide a very good domestic market to try, develop product market fit, and then scale globally with a very good talent pool, and a lot of founders who have actually learned the art of teaching. If you take all of these companies that you talk about, they were all teachers
Yeah.
in some way or the other, right? Like they talk about Beju's teaching cat in stadiums, or the Vedantu founder was actually a coaching class teacher for 5 6 years before he started. So things like that. I think that a lot of smart people who decided to teach and are now wanting to scale, they will have a very good domestic market, and then they can use the talent that is already there to scale. So very excited about that. And I think that, I mean, if you look at Maslow's hierarchy of needs, you have food and transportation and hospitality and other such things. You look at any of these markets and there are multiple unicorns. Beju's was like the first company which crossed a 10 billion valuation. Otherwise, you had like literally in every other category, even 2 or 3 companies that are more than 10 billion in value, right? So I think that it means the market is very big but very fragmented, and there can be some very big companies that will come out of it.
Yeah. No, I'm personally excited by the fact that you will have a lot of homegrown, like solo entrepreneurs in some,
Correct.
right? So,
Correct.
especially now with remote conferencing and virtualization, whatever it is, why can't I teach someone in Romania, for example?
Correct. Absolutely.
Yeah, yeah. So that's a fantastic market that's waiting to happen. I feel. I mean, we're still at the early stages. Any other sectors that you're sort of excited about? Deep tech, healthcare.
I actually think logistics is a very interesting category. Uh, Huge untapped opportunity in India, very big market. It's, if you look at any category, it's the only category which has like 3 unicorns, and I think there'll be even more very soon. Um, it's because I think the market is like 200 billion plus, and its infrastructure is not in place. It's pretty broken. Technology is not used. Lots of money being thrown around and not being utilized well. Leakages exist. And as you know, the world starts moving more digital, and India, obviously, as you can see, the e-commerce surge that's happening, logistics players will just become more and more important. You need to get things from one place to another faster.
No,
So,
absolutely. So if you look at, like, I don't know, food wastage in India, for example,
correct,
it's some atrocious figure, right? So
correct,
yeah, I think that's a fantastic point as well. Yeah.
right,
So we're in 2020, right? And the world is what it is.
yeah,
What are some unique things for founders to look at this point of time? What are those
yeah.
key trends that are happening that you feel founders should leverage?
So, I mean, I don't think that, companies that have seen their businesses being severely impacted, those will be the ones that will have to really change their strategy a lot. But in general, I think, there are a few categories that have been really impacted. For example, hospitality and food, outside, not internal to your homes, have been impacted a lot. I just think that the pandemic has kind of accelerated a lot of changes that were kind of on their way, and they've just made them more acute, right? But I also think that this has opened up a lot of opportunities. For example, working from home, how to enable that, how to enable literally doing anything from your house. It's an underdeveloped category, and I think that is one that could be an area where a lot of entrepreneurs could build and create value. I think that you shouldn't go into any category because it's super hot. For example, edtech is really hot. People are like, let's jump into edtech and let's do it. I just think that look at some gaps that are not being solved by anybody and that are pretty apparent. I think the work from home thing is going to stay for a long time. In fact, people have realized that it's more productive. There was actually a paper that Stanford had done with C-Trip in 2013, well before the pandemic, that actually said that allowing people to decide whether they want to work from their office or from home resulted in like a 25% increase in productivity, right?
Yeah.
So I think that category is the one that's most interesting. The rest are, uh, you know, already existing, and there are more opportunities or less, but in general, they've just moved in the direction that was happening. I would actually say that the rental economy was the one that's probably kind of shocked, because that was a trend in the right direction and now it's suddenly gone away.
Yeah.
Maybe it's a correction and it will get things back to a more rational, not rational, I would say. It will just swing the pendulum to the extreme and then come back over some time.
Right. Yeah, I don't think we'll go back to 5 or 6 days in the office again. I don't think
Yeah,
that because I think the median has shifted.
correct.
So we might go back to a few days in the office because I mean, I don't know, somehow I miss the energy of the workplace as such.
Correct.
Uh, but yeah, I think whenever we do go back, we'll go back very, very meaningfully, right? So it won't be like, okay,
Right.
wake up at whatever time and then head to office.
Correct.
So let's talk about your writing. You're super popular on LinkedIn, Quora, and stuff. So how do you write? So the thing that I really appreciate about your writing is one that it's dispassionate, it's without color, right? And it's very, very data driven, very insightful, and so on, right? And you're able to draw upon something that is again staring at you in plain sight, right?
Right.
So yeah, educators, how do you
Yeah,
write?
no, so you've encapsulated it really well, and that's really the goal of the way I try to write, right? Keep it simple, but also not leave the reader with like, what was the point of reading this, right? There has to be some insight. You have to be like, oh, this was interesting, and it should not be so complicated that the arriving at the insight is difficult, right? What happens with a lot of writers is that they complicate things so much, and they assume that, oh, if I write complicated stuff, people will be like, he's so smart. Actually not, they'll just tune out, right? Think, make it simple for the reader to come to the insight, but let the reader come to the insight themselves, right? So keep it simple, but have an insight, and don't take sides or color it emotionally, right? There's no need. um, I
Yeah.
think people who need to play politics or be appeal to emotions, they tend to get a lot of traction, but it becomes really short lived, I feel. And the
Yeah.
ones who do it like on a consistent basis, like some news anchors in India, uh, it can become really painful as a personality, right? You have to take that extreme position, which I'm not really a big fan of, taking extreme positions in anything, right? As long as you are saying the truth and speaking the truth and understanding the truth, that's what's most important, right?
Yeah.
I don't believe in like
Actually,
being an extremist.
you don't have to take a position about a lot of things. It's something that
Yeah,
people don't realize. I mean, you can
yeah,
just be a dispassionate observer, right?
absolutely.
So my saying, for example, you're spending this much on CAC for a business that is actually this much.
Yeah,
I mean, it's just, what do you call that? I mean, it's just an observation, right?
yeah,
Unless I'm
absolutely.
falsifying any facts
Yeah,
or figures
yeah,
and stuff
yeah.
like that. So
The other thing I do is that I believe in being a champion for startups.
yeah,
There are a lot of commentators that believe, oh, let me find issues with this company.
yeah,
I'm like, boss, the startup is a broken ecosystem, right? Every company has hundreds of issues. That's why they are startups. They're not like
exactly.
organizations, right?
Yeah, yeah,
Out of 100 things, 90 will not work. But is the 10 that if they work, they become like huge, right? 10 things. There are those 10 things. And, you know, running a startup is like running a project and doing experimentation regularly. You're A/B testing everything, team, processes, product, marketing, everything is on the table to be discussed, right? So there are more things that are going wrong. And like you choose any startup, you throw a stone, you'll find something's going wrong, right? So it's
absolutely.
easier to write
Yeah,
what's broken in companies rather than what's actually working.
yeah,
And I think startups need champions, not critics. And that's why I tend to be like positive about them. And I try to talk about their potential rather than talking about why they could die, right? So it's just not it's harder to write positive things than negative things, but I am a generally an optimist in life. So that's another thing that you might observe in my pieces. I always like talk about how this could become big rather than how this could go to zero.
yeah. So that's the single biggest grouse I have with some of the startup journalism, right? It's sort of this gotcha journalism, right? So which is hey, that's so screwed up or whatever it is, and look, I mean, I am able to point that out to you and educate you about
Right,
it. Nobody
right,
wants to know that. I mean, it's like
right.
everyone knows that a startup is not perfect, and if everything is amazingly well and everything is rosy, then it's perhaps not a startup itself, or you're missing
Exactly.
something obvious,
Right,
right?
right.
How do you see people consume your writing on LinkedIn versus Quora versus other platforms? And do you have like a set strategy on how you operate across these platforms?
Yeah, so I don't write on Quora anymore. I stopped writing like 2 years back, but I have like a ton of followers there. Uh, and that's because I wrote for 5, 6 years. I think platform has kind of become like Facebook or an Instagram lead gen, which is not the kind of person
Yeah,
I am or I
Quora
want
is.
to.
So I was early in Quora. I think I joined in 2011, 2012 types.
Yeah, same.
And yeah, I mean it just like deteriorated so badly.
Yes.
And I remember going on your profile and seeing this question that someone had asked you. I think, what is Aviral Bhatnagar the Warren Buffett of
Buffet
India?
of India, yeah. Yeah. So stuff like that. So, but the one thing that I really truly believe in is you have to be consistent.
Yeah.
I've been writing for 257 weeks
Wow,
continuously, and I've not missed a week. So it's like 5 years, like
fantastic.
almost. Yeah. And my strategy is very simple. Write interesting stuff. Don't bore people. Uh, be lucid and simple rather than being complicated,
Mm.
and write about a topic in a way that you can evoke interest, right? So generally, like if you see even the founders or the investors, when they write about their own companies, they're not able to get that much traction, right? Because they're talking from their vantage point. I'm talking from like a vantage point of a reader, like, hey, this is what I want to actually read about,
Mm.
right? So I try to get that sense in the pieces I write, so that it's something I'd like to read as somebody who doesn't understand anything, right? So decontextualize it. I think founders and investors are like so passionate about what they're doing that they tend to not care about other people who don't have context, right? So I'm the guy who's like, hey, let me set some context. So what is this actually?
Yeah.
Um, Strategy is very clear in terms of I write the newsletter once in 2 weeks with the team that we all work together. It's pretty interesting now. But I tend to write on LinkedIn like once a week or twice a week sometimes, which basically is like on a topic that is current, and I may have written about it previously, right? So it's a good way to revisit previous positions I'd taken or analysis I'd done, which would make sense.
Mm.
And that's really about it. I like write on Sundays. That's when a lot of people are on the platform. Um, and I write in the afternoons. That's also when most people are on the platform, and then it gets good traction. And that's it. I mean, I know I'm making it sound simple, but I've optimized it a lot because I know that this time works, and this is the kind of strategy and template that people like to read. So that's a process I follow. And
Yeah.
I think now I have 140,000, 150,000 followers on LinkedIn.
Oof.
Just like consistent building.
Yeah.
And I don't believe in like spamming. There are a lot of people who write on LinkedIn on a daily basis, like 3 times, and get traction. I just don't have that much time. I'm sorry. Like I can just write once a week, twice a week at max,
Mm.
20-30 minutes. And I'm a long term player here. I'm not a kind of person who'll write for a couple of years and then like forget it. I think I will write for like many years, and then compounding just happens. 10, 15 years. If
Yeah.
you're just growing 20%, you can become huge. So
Yeah.
I look at it that way.
Yeah, I mean, it's particularly interesting you mentioned that, right? So some of the best people on the internet who write, like this guy called, do you follow Wait But Why? Wait But Why is,
Yeah. Yes.
okay.
Yes.
And there's this oatmeal guy, Matthew
Yes.
Wilson.
Correct.
I mean, these
Yes.
guys have been writing for like, I think about 10 years or so.
Correct.
And yeah, yeah, I mean, they've been super consistent and they've sort of figured, but I'm sure the first post that you wrote, I mean, didn't get you like 1,000 likes or whatever.
You got me 3 upvotes. Yeah. So obviously, so it looks like overnight, but it's been a long, and I don't write for just the engagement and recognition. Obviously, that's important.
Mm.
But I'm the consumer, right? I should like reading what I wrote. If
Mm.
I don't, then why will others, right? So that's how I write, and I don't want to write at a pace where I feel like burnt out, that I am like a content machine, which I don't want to be. I
Mm.
just want to feel like the pace is doable. I'm able to generate very good content and tell good stories, because there is not so much in the world that you can talk about every day, right? You will not be insightful if you
At least nothing
right.
that, provokes you or evokes a response.
Moves the needle. That's right. I mean, even like once in 2 weeks as a pace is can be argued that it's a lot. Once a month is probably the right pace, like 10 things a year, right? But I think a lot of people think that if I talk a lot and there's so many things to talk about and create content, it's good because a lot of people are. And then we can go into the monetization part of things. A lot of people are just like focused on generating a lot of content because monetization is important. And sometimes negative things sell, which is why a lot of the publications are doing scoops and investigative journalism and everyone's like sharing it and paying money for it because people want to read about dirty laundry sometimes, most of the time, right? It makes people happy, I think. But I guess monetization pressures and all those things
Yeah.
are something that I don't want to contend with.
Okay, so I wanted to ask you about the newsletter and the blog. So, what are
Yeah.
your future plans with that?
So I actually didn't really think too much when I started. Like it's usually been what I found interesting and I just kept doing it. I think it's become much bigger than I thought. It was just a newsletter with certain reads and very short commentary initially. Now they become like stories and essays. That itself was an evolution, setting up a website, starting a podcast. We actually talked to Gojek's co-founder, um, and we released that yesterday.
Right.
So now there's a podcast, there are concepts, there's a community that had an AMA yesterday again, super well received. A lot of people have joined. So I think what we are trying to build is a place where we can exchange ideas, meet people, and deep dive into the startup ecosystem in a better manner. That really is the goal, right? All the ways to do that, talking to founders, having introductions made, etc., uh, is basically what we're trying to build. That's really what I think is the goal, and we will do it slowly. It's a side thing. I'm super proud about it, but you know, I don't want to accelerate it at a pace that it becomes unsustainable,
Right.
especially because it's something we're doing out of interest, um, and there's no very clear monetization or revenue generation strategy involved.
Okay. And it's a juniorvc.com, right?
Yes, that's right.
Okay. So I remember seeing your tweet with a bunch of books that you said recommend and so on. Do you want to go through a quick list for our listeners right now?
Yeah, sure. So I mean, I think that books are like windows into experiences of people, and you're able to do it without actually having to meet them.
Yeah.
So it's a wonderful thing, and I'm like a book addict actually. I was the kid whose parents had to snatch away textbooks before exams because I just loved reading stuff. But in general, I think there are some very interesting books that you should read when you're young and starting your life. And I was thankful to have stumbled upon them or being recommended. I broadly categorize it as building self and general humanity. But I also read very specific niche books that are probably not useful for a lot of people. I think books such as Zero to One, Shoe Dog, Hard Things About Hard Things, Steve Jobs and Alex Ferguson biographies are extremely insightful for building businesses. I think meditations, range, mastery, thinking fast and slow, and Siddhartha are very good books for reflection, understanding who you are, and understanding the world. Sapiens, Genome, Moral Animal, Road Ahead, and Principles. Excellent books for understanding how people behave and actually working with them. So I mean, these were my 15 recommendations. I think I remember them correctly.
Yeah, you do.
Uh, so uh, yeah, I mean, these are all very good books and very good reads. But I would suggest reading hundreds, if not more, books over your lifetime.
Awesome. Any particular podcasts that you listen to?
I listen to obviously our own podcast. Have to be a consumer. A junior VC's podcast is Invest Like the Best that I like a lot. I like Acquired. I like the Economist podcast that they do, Economist Intelligence. I like Masters of Scale. Yeah, I mean these 3-4 would be the ones that I would strongly recommend.
Awesome. Hey, thanks so much, Aviral. This was a real fun conversation. Nice talking to you. Thanks so much for making the time. And thanks everyone for tuning in. The podcast is going to be available on all popular platforms. And if you like this episode, then don't forget to share and subscribe. Until next time, stay safe and take care.